Good morning, class. Welcome to Homeroom with Unc and Market Monk. Morning, P. How's your week?
Really good. Just solid on earnings season is winding down, but they're just a couple that fit our formula really well. MKC and then RH I caught late in the week, so focused a lot on that. A massive winner on a MSTR put, just a kind of a zero DTE thing. Just saw the look there. So don't do a lot of puts, but you know a stock really well. You can just kind of see writing on the wall, and you can take advantage of that. I think that part of that process is people talk about letting trades come to you, and I mean that's I don't know if they even know what they mean by that, but what that means to me is that there's a setup. Maybe you're not planning to trade, but your ability to recognize it quickly can lead to some opportunities. So I don't think you oversize and stuff like that, but you just take advantage of it where you can. And then for me, oil and gold, silver, just got in early there. Just those are kind of on autopilot for me.
Nice. Yeah, I stuck to the. I guess I stuck to the news and the session notes. That DWAC to DJT was really good for me. Probably more than I could expect from something like that to wake up to the next day. Um,
Yeah,
CGC retrace is real good. We've been on the weed names for a while. Um, and then the Hut ER, MKC ER, were all really good plays. Just basically making the work pay. I don't do the 2-to-1 put thing or 2-to-1 call put thing on ER, so I got to play them a little different. But um, when we see the upside, it's obvious on some of those, or it's becoming more obvious. Just letting the work for us. Um, yeah, so good week, good week.
yeah. I mean,
Less is more over here, P.
absolutely. And we have a DWAC. I bought that a long time ago, and I said I'm going to keep half of this election run up, and then got the move earlier than that, just with the changeover and everything. So yeah, I was really happy with that. And MKC was one of those kind of unique ones. Had this with a couple others, Sherwin Williams, and it's just stocks like I'd be okay owning this here. So I'm gonna just pay it through earnings. I'm gonna buy more if it falls, and just it's a good stock. It's a staple. It's gonna be fine. But then you get the move on earnings, and it works out well. And I did have the calls and puts with it. I bought a little more time. I think one thing that people, from an EDU point, you're looking at options through earnings on something that's kind of quiet, not your Teslas, Nvidias, anything like that, but prices, paint, WD-40, whatever. Um, just look at the option prices a few months out, and you'll notice that they're almost the same. You're maybe sometimes $20, $40 more contract, but you're just you're not going to get killed on those, even if it doesn't go your way. You'll lose, sometimes significantly, but you have a put on the other side that helps with that. And then those contracts still just have a chance. RH, at open was up like 10%, I think, went up to 18%. Really hard to hold for that whole move if you bought a weekly though. So that's why I had listed contracts out into April and May, um, for that reason, because it's like I can see this potential to 400, but it's 400 is not going to happen at 9:30 in the morning. So you want to give yourself some room there, and the implied volatility is about half of what it was for the weeklies. So all of that kind of works in your favor, and it's better to just really know some of that about options going in than to just slam the buy button and learn the hard way. Um, that's kind of my point there.
Yeah, I
And
am.
then one more point
Go
about.
for it.
Oh,
Go
go
for
ahead.
it.
Yeah.
No, go for it. Go for it.
One more point about options that this kind of relates to that. People thinking they have time. They'll tell me something like, "I bought, 419, so I've got time." And they said the same thing 3 weeks ago about April 19th. Well, it's April 1st tomorrow, so you don't really have that much time. So whatever you think you have, whatever you think you're doing with buying time, maybe add a month to that, as just kind of a little self check, and you'll be better off. I've said for weeks, you guys need to buy, if you're going to buy options, month of expiration should end in Y. So meaning May or July, and you're just so much better off doing that. And then also, I buy out of the money, but it has to be plausible. What is plausible depends on the stock. For Carvana, it's out of the money sometimes is plausible, but that's not the same for most stocks, particularly gold and silver, oil. Like, you just want to get closer to the money. So whatever you're thinking of buying, buy closer to the money and buy more time if you're going to do options. And it's not going to hurt you to do that. It only can help you. That's my take there.
Yeah, I mean, I don't trade the options, but I mean, we hang out enough that I picked up enough like things that I would call rules if I started to, and the close to in the money or having a chance to go in the money is just one of them. Um,
Yeah,
and I see a lot of people like picking up prices or strikes. I'm assuming that they can afford or that look cheap. Well, they're cheap for a reason. I mean, I've heard you say that a few times, and the market is a story. We talk about that a lot, and following the whales' dates is I think is very important because they're looking for an overall market move, and I, I know it just from trying to figure out the difference between the two. But like consolidation on the share side is your best friend. You're being able to DCA or pick up a couple buys and build support inside of a zone. Consolidation on options is just giving money away. Yeah, every
yeah,
week that we sit at a level, you're not doing shit. So you want to be, I mean, I guess you want to be close to the money, but you also want to be close to the move. Swinging options isn't for new people. Even though I know we kind of preach it's safer, um, it has to happen still within a couple weeks, in my opinion, or that position's just going to decay on you. Again, consolidation's just not good for you. And then on the share side, it's really good for you. Critique that a little bit.
yeah. So that's really what the origin of the beef trade is all about. And where it's like, quick version is 80% shares, 20% options. Usually the options have a lot of time to them. So something like gold, the ticker gold, I'll have 80% shares and then 20% close to the money options for January. And the thing about the January position is I move in and out of those. So I might have 10 contracts, makes a move, has a good week. I've sold seven of those. And then I'll rebuy them if it dips or consolidates for a week, or I just won't, and I'll just keep the three, and that's it. And the shares are really what capture most of the move. Um, Roku is a good example of consolidation lately. Whales
Hmm.
have been losing on
The
shorter term
70C on
options.
the 70Cs.
Yeah, yeah. They keep punting it. They keep rolling it to a later expiration. But they lost money the whole week on it just being parked there. What that tells me is that they know coming with this, and they don't really care about losing money short term, or they're selling some calls too, maybe further out of the money. There's some complexity to the multi-leg thing. But if you're just the person, you're dipping into options, you're buying one contract or two contracts, and you think that you're reducing risk because you're spending $30 instead of spending $120. You're not reducing risk. You're just throwing away $30. So it's not a
Yeah.
big loss or anything like that. But it's just your probability of success is so Oh, it's not worth your time, I think is the main thing there. Even if it's just $30. But those losses do add up, so that's one thing. And then you just want to get in something that has a chance for success. That's why I do trade expensive stuff. You really have to if you're going to trade that. You can't trade a $50 contract on AVGO. Even the times when it went up 10% in a day and those contracts went 10,000%. How many times does that happen? Maybe 4 or 5 times a year, which is still a lot for a stock that big. But you have to, if you're going to trade it, it's $800 to 1,000. It's 1,000 to 1,400, and that's my comment. Like, yeah, it's expensive, but it's more expensive now. And I the only reason I'm in stocks like that is because for day trades, they're very readable to me. So I if you just don't, you have to find a cheaper stock if you don't want to spend that much money on stuff like that. You cannot go cheaper just by going further out of the money. Um, Whales define the playing field. Don't be out in the bleachers. You want to be on the field, you're going to have to trade what they're trading. So I do my best to guide people to that. And if all of that's kind of overwhelming or risky and you don't want to deal with it, plenty of stuff here for shares, and I'm in all that stuff too. So let's talk about those. Well,
Yeah, I think one of our members said he was just boring share trading and up 25% in his Roth IRA already this year,
yeah,
just from
exactly.
like not
Yeah,
really messing with anything. Which to me, I mean, that's more what it's about as a swing trader. That just makes me say, "See, I told you." Like, I mean, unless you're good at options, you're wasting time and money, in my opinion, in a lot of cases. And
yeah,
and
and
that's
I
not.
try to be upfront. Like, uh, I'll say that when someone asks me about a setup, like they wait for it to happen and then they ask me, I'm like, well, that note was for this morning,
Yeah,
so I don't know. I'll have to check again. I saw what I saw for the flow going into the day. Got that move. Now it pulled back. It's going to have to get more, fuel for the engine for it to move again. So um, that timing, whole world can change in an option contract in 15 minutes. And if that's not something you can deal with, then you don't have to trade that stuff.
when I get a fish on the share side, my notes are 15, 20 minutes apart because that's what it takes
Yeah,
to
yeah,
consolidate and move up a next level, and I just watch level two. So I mean, it's night and day in that regard on how fast you need to be on from a day trade standpoint, not from a swing. Just even the stuff we day trade on news with our on volume spikes, I guess is the best way to put it. Um, One thing I wanted to, I mean, kind of not off topic, but it's on topic because it's EDU that I've been thinking about lately. Kind of I don't want to call it the elephant in the room, but it's something that I don't think people wrote down or really think about and they get caught up in. But little secret to everybody, I don't research a lot of these shitty companies, and it's not for the reason you would think. Um, to kind of get to make it as quick as possible here, I think every trader, when they start this, they want to know everything about every single company they're trading, and that's just going to get you hope, and you're going to fall for uh, the best example I think of hit home with everybody is this is going to cure cancer. How many people haven't got
yeah.
bagged on this is going to cure cancer or solve blindness or it's the next big thing, and that goes back to the speculation versus actual result, and when you tie that with the original move happening, um, the first move, the speculative, the weed's been a good one. That big speculative move that happens. Same with SoundHound. Like it's going to come back to reality eventually. And if you just get caught up in reading about what they're supposed to do, you already missed the supposed to do trade. Now you're in the nuts and bolts trade of it. And I guess until you get bagged on some cancer research or the next big EV or something, you really don't figure that out. And I think some people just think that not that they weren't wrong, right? Well, you were wrong because you just bought the speculation after the speculation move happened. Um, And I think that's one of the things we don't talk about in here. And you see a lot of new hopeful traders hold on to trades because of that. So they're shitty companies. I mean, that's where that saying, "Oh, I trade shitty stocks." I mean, you just have to keep that in your mind, um, because I think that's going to save a lot of people. Because I see that on the set. The reason I'm bringing that up is because I see that on the secondary moves. Like CGC is a good example. Like it already happened. You should already be watching it. You already know the price points. You should know we're going to get consolidation. We're going to get lower highs, higher lows. It might check back down to a real support level. Um, but all that stuff is they're like, well, I seen it run to 10. It's going to do it again, and that's just not the case. That's just not the case.
Yes, and I see this too with people wanting to get into the fundamentals of companies, and the stock was a growth stock, and now they want to try to define it as value stock, like Baba. Um, and that's just an entirely different narrative that's going to move that. And well, I don't think you're just going to get killed on Baba buying it at $72. Uh, you probably will on options, and that's been true. I mean, people are asking me about Baba for weeks now, and it's just done almost nothing from perspective. I mean, it's a good accumulation zone for shares, maybe, but you just it doesn't automatically mean that something's going to go up just because their fundamentals are so much better. And that burned a lot of people. Some of the stuff that we trade now at kind of found its footing, everything is they did that all the way down where it's like, oh, this is cheap now. Roku is cheap at $280 because it was $480. So I'm going to get it here, or I'm going to get it at 200. Or the coin was the same way, all the way down. Whereas it kind of reestablishes itself, and there's a new story and a new narrative that starts. So I tend to care a lot more about that story than I do the fundamentals. And with the curing cancer and stocks like that pop off large on news, that move from that story, it already happened, and late, you just got to stay away. So, um, fully with you there.
Yeah, I don't. I just it's just not talked about a lot, and I see it
Yeah.
because of well, I'm trying to give people the benefit of the doubt on why they're late and why they want to trade the secondary move after the speculation move already happened. And I really just think that's it. Is they're late, then they really do some extra research where they shouldn't be, because really you should just be watching the damn chart, figure out the price points on the chart. And the company doesn't matter. That's an investing thing. Kind of bounce off of what you said. The only thing I've really bought, probably in the last year and a half, all the way down, was Square. um, but again, like that's a different angle, and you really got to know the history of the company if you're going to do stuff like that. The upside part of that one that stuck out to me was AMD. The AMD combo this week in the group. Just for
Yeah.
me, that's a sympathy play. The Where you should have bought that, you're up 100% already. Um, and there's real no reason for that move besides the sympathy. And if you get into the fundamentals, they're just juiced at this point. I mean, it's 55, 60 forward PE. Um, it's not Nvidia. I mean, Nvidia probably shouldn't even be where Nvidia is at. Again, it's all speculatory right now. That's not actual money coming in yet. So if they don't execute, the only way is down. But when you get
And,
two or three,
yes.
four levels out on that thing, when you get out to SoundHound and AMD and any TSCM, any of the other semis, like it's not gonna. The pain's gonna be worse, in my opinion.
Yes, and there's just a better way to trade sympathy where there's laggers in the sector. Um,
Yes.
OUST is a semiconductor stock that related to lidar, but they had earnings and had that huge move, but it was in a good place on the chart to begin with. So I was just looking for 5 to 6, some and went crazy. But there's plenty like that, and then there's the it's not really sympathy. It's more like complementary. The the ACMR,
Sure.
where you want to make chips, you're going to need this machinery that they make, and it's going to be part of it. But yeah, so AMD kind of trading little brother there, to Nvidia. It's had a great move with it. Um, that I don't like how that day chart looks with like that huge pop to over 230 and then coming right back under 180. Don't really like that. I think it would need to break down further before I'd be interested. But there's going to be a lot like that. And I actually, with the flow I'm sending you sometimes, um, I I send you flow on stuff I think is good. I mean, I don't mean it like that, but I kind of just test your read a bit because I just want to see like the flow's pretty good here. I do see the downside though, and I'm waiting to see what you say, and then I go from there. So Lamb Research was a good example of that. There's been this flow set up potentially to 1200 for a while. The fact it hasn't claimed 1,000 yet, and given what the sector's doing, and you are compounding your risk a bit. So try to test that out. But I don't like to be. People can ask questions. There's good questions and everything, but if it's on something that I was already up 80% on and have sold most of it, it's not. I'm not that inclined to re-enter. I throw out a lot of tickers. I mean, like we have a lot of stuff here. So I don't know the benefit of turning to some of those names. It's a little different if someone has a plan and that they describe the whole plan to me, but just like run flow on blank usually doesn't really get us anywhere.
Yeah, I to kind of bounce off of what you're saying about tickers, too many tickers. I just have a while ago, because I mean, there was a point in time where I'm like, why are you sending me this shit? Like it already moved. But I've
Yeah,
separated it to some of these things that are a little overcooked are going to have really good option day trades. So
yeah,
I'm helping with that as part of what we do as traders in the room. But I try to be very clear. This is not buyable with what I do. But
yeah, yeah.
there's a range up here. I mean, a lot of your all-time high charts are that way, and it's just you can trade them from the day side, but they're categorized as the 15-minute trade or however you want to put it. And maybe we should be
Oh,
a
and here's where
little better on putting that notation in there. But it transfers
yeah,
to your notes, and I think if people haven't figured out, your 3 or 4 notes in the morning are literally for the first 30 or 40 minutes of the market. Like they're quick. Um, that's
yeah,
kind of what they're for. They're your daily notes. They're not your swing notes.
yeah, exactly. And I mean, especially as we get new people, I think there's things I can do to clarify that, bring back the emoji glossary and all that. Yeah, and so there's so like AVGO table to actually return to shares on that, under 1220 was my number, and it did not stay there very long, like one day, and then it was gone, and that's how a lot of these all time high charts function. So I'm trying to identify spot where you return to shares on a lot of these because I mean, when is $880 coming back on AVGO? Maybe never. So you're entering the market and you're buying stuff. I mean, so where can you get these? Because they are companies that are still very promising, and probably got a share split coming, which is actually the main reason I wanted shares. But Yeah, so I'm totally with you there. But we are in a market where the all time high chart, because a lot of stuff has kind of gotten up there. So I think you don't just look the dirt cheap stuff because it's cheap. Gotta have a gotta have a reason, to move that sector, and that will transition real quick to talk about sectors. We are kind of in that moment with oil and metals, where
Sure.
rotation that Twitter's just picking up on, it's been going on for weeks, and we were already on it. But I do see some potential there to continue.
Well, you're gonna be able to buy semis again. It's just not gonna
Yeah,
be anytime soon. It's just have because
yeah,
of that
exactly. Yeah, yeah.
rotation, because of that rotation you're talking about. And not to tip the cap to anything, but the solar is probably a good example. Like there, a year and a half ago was a great, or 2 years ago was a great time to buy solar, and now you're back or below when it was a great time, and there'll be another great time to buy solar. But if you need to buy semiconductors this month, I just don't think you're in a good spot currently. I mean, and that's just part of the cycle. There's just better stuff, and there's enough stocks out there to find what's ready instead of just trying to pick some fruit that's about ready to fall off the branch.
And you also semis are not an easy short either. I mean, so I kind of got into it with someone on Twitter about that. They were just doing victory laps on Nvidia having 2 bad days, and I'm like, all right, well, number one, you didn't post this days ago, so where's the trade now? Then on Friday it was flat, and all the people buying puts got wrecked. All the people buying calls got wrecked. So um, you know, they're resilient stocks too, and just sort of bounce around Nvidia like a $50 range. But yeah, I mean the always want more room above than below
Yes.
on a sector like that.
Yeah, 3 to. I mean, someone asked me about 3 to 1 ratio this week, and I mean, I don't say I live by it, but it's so ingrained in my head that any chart I look at, that's what I look for. And when most of these charts, I think AVGO, like I need 930 on that, and I don't see $600 to the upside or whatever it would be for the 3 to 1 ratio. I just don't see it. So it's
Yeah,
just not.
yeah.
It's not. They're not even appealing to me. I don't care. Again, I don't care about the company or the story or anything like that. I legit just care about that ratio. I mean, that's literally number one. I have so many analogies. The used car, you're going to buy it for 100K, 60K, 50. I mean, there's a point to where you're going to buy it at, and it's not at all-time highs for me, and that just saves me a lot of stress and and red positions. I guess that's the best way to say it. I mean, the ratio has to be there. You want to buy stuff when it's cheap, and I try to do that in everything in my life, from grocery shopping to car shopping. I don't care what it is. Airline tickets. I'm trying to get the best entry. I just really am. Instead of just
Yeah, yeah.
buying things on need or needing to trade.
Yeah, AVGO for me, I had this plan that so I have 4 shares under 900. Then I'm like, like to get 10 shares. So that means I got to average up. Got to find the best possible spot to average up that I can, and it was that 1200 spot because I think they're going to split and then try to work my way up to 100 shares is sort of
Yeah,
the goal there.
I wouldn't buy
Um,
this shit out. It'd have to be 950, 930 before I'd even think about buying shares on that thing. I don't have a position.
880 was my pivot. So
Yeah,
yeah.
right in there, 100%.
Um, I got a few quick sector updates,
Let's do that and then
so
get
then
into
we can get
SPY.
on to SPY. Yep.
Perfect.
So oil and natural gas had a big Friday. Market was closed Friday, but futures were not. So oil's $83 went up 2.2% Friday. So I'm definitely watching there. 88 to 92, sort of what I'm looking for that to get into. So if you have oil positions already, you're probably going to have a good morning on Monday. So just be aware of that. Natural gas still in the dirt. It was up 2.5%. Really looking for that move to two. It's at 176 right now. 180 got rejected last time. I'd look for it to break through there. And really, our combo stocks, Comstock Resources has been great. Jerry Jones thesis. There's some others, but yeah. So I think you're still in a pretty good spot to load some of those. Um, the ETF's still dicey to me though. And then copper's parked right at my line at $4. Um, Defend that. It's in good shape as long as it doesn't break, down to the 380s. I think those are still good. And Uranium's been pretty stable around 88 bucks. I think that what I'm looking for there is a move back to 100, but I'm thinking fall, winter on that. But I do think that sector's uh, priming the rocket, so to speak. So
Yeah, no, those from the I like the combo stocks the best. Uranium second, and what in that area. There's some few outliers. The chart just makes sense. Southern Copper was the last one. But
yeah,
those are slower moves for me. Gonna keep the lights on type trades. You get your 1 or 2% a week, and you look back and you're up 20 or 30% in 4 or 5 months. But they're share plays for me. I think they're just way
yeah,
easier than trying to day trade or swing trade options on, um, unless the news comes in, and then you just got to take your money. But those again are the ones you just set and forget for me, and I value those a lot for what we do because they're the I guess the catalysts are kind of already built in. If things get moving, they'll do good, and natural resources you just need to do it pretty much anything, pretty much anything.
yeah,
So
yeah. And gold and silver, I think, not to just those positions. I'm trying to find ones you can still enter because a lot of the miners are still, still lagging behind the commodity. Silver in particular, look for a break at 26. Silver goes over $26, you're gonna 100% some of those silver plays. So um, we're early there, and I got entries on AG and a couple others where I can just be as patient as I want to be
yeah,
for a massive move I think is going to happen. But I already got the trade successful as it is, 30% on most of those. Um, so that's the advantage of what we do. A lot of people talking about gold and silver now. Didn't like it when we were buying it, so that's kind of where you want to be.
yeah. I don't say it enough, but I try to say it every couple months. But if you're good entry, you're going to be buying red. If you want the bottom,
Yeah.
there's no way you're not going to be buying red. There's no way. So get a little used to it. When it's Uber selling off, that's probably going to be the best time to buy, especially if it's around a historical TA level. Spicer, we both had the 424 top. I was 90 cents. I was almost a buck ahead of you. I had 99. You had oh 09. Um, you had 13 on the bottom. I had 15 on the bottom. We didn't get to our bottoms, but we were real close to that top. 424.61 was the top. So pretty much spot on if you split the difference between us on the top. Just not the downside. Um, going to be seventh out of 8 week. I said it. Like there's just not much stopping this market. It goes back to that broadening that we talked about at the first of the year. It's just happening right now. You're getting little pop-ups all over the place of stuff just bouncing back, and I just see that continuing. Market's kind of shaking off the Feds at this point. There's no situation anyone sees where they're going to raise rates, even though they're putting off cutting rates. So I just think this is where we are. This is the kind of market we're in here probably for until Q3, um, unless the summer's real cold. But just don't see it with how many charts are beat down going forward. There's going to be something to trade.
Yes, and I think at overall story of Spy is going to have some quiet days. We especially at the start of the week had that with I look at Spy and it's like it's up 0.18% or down 0.10%, and that to me that's really hard to trade. The people who trade Spy every day, I mean, I don't know. I guess maybe early in the day you get a decent flush and bounce or whatever, but that's yeah, that's kind of not for me. All right, so yeah, I've got numbers here, some contracts that I think stand out. The big story with Spy contracts is just so much dead open interest in the low 400s expiring in the next 2 months that those those contracts nobody's buying or selling them. They're just gone. So you got to kind of clear the books a little bit. before those kind of reads come back. So I'm kind of looking at a lot of the shorter term stuff, some of these multi-million dollar cross trades where they're tossing these contracts around. A lot of those kind of define the upper limit for me. So 44527C is a contract that stands out to me. So that maybe is going to find my top a little bit here. I'm going to say 52811 be my top on SPY, and then the bottom and go back to say 51573.
Still pretty big range there, P. Um, I got 51840. I just kind of pulled the bounce last week because I'm kind of think we got to stay inside bar. To back up a little bit, we were 0.02% Thursday in SPY. Good luck trading
Yeah.
that. Good luck trading that. Um, top side about impossible for me, so we do just pull numbers out our ass. At least on my side, I do. I was gonna go 527 just because I think we need a little bit. I think we need one of these, one of these doji red candles that we had here 2 weeks ago, which really didn't change price. It just stayed inside price. So I'm looking for that. 527. I'll just put 27 again on that since I don't really have a level there. But that's still, I mean, $9-10 range during the week. The question we've been rolling with, and it was yes or no last week. At 520, we still closing above that.
Yes, I think we do.
You got yes on that, and I'm still yes with you. Again, I just don't see anything getting in front of this market. Um, it's just going to be a little bit slower grind here as we broaden out. That's still my thesis. We're going to broaden out. So when we do that, you find stuff that's beat down that is ready to have its day, especially if the flow and the TA match.
Yeah, and I mean, one of the things I picked a pretty big range for SPY this week just based on the contracts, but the alternative to that, I mean, one of the things that keeps it really compressed right now is that oil is so strong that it absorbs any kind of loss you're going to see from Nvidia, Apple, or
Exactly.
whomever.
Exactly.
Apple's also it's pretty far down. I mean, all the tweets about Apple are about being under the 200 or whatever the TA thing is. So Apple's just this big disaster. But I've seen this a lot that where they give themselves a runway. Apple has a couple good days. It's gonna prop up the market or fuel the move or whatever limits the downside. I think is kind of the biggest thing that comes out of that. So I don't know. The puts I'm seeing, to me, really bad morning for SPY, and then a recovery is kind of what I anticipate as far as that goes.
Yeah, there's some
I don't know. I don't know which day.
inverse head and shoulders on Apple. Sorry.
Yeah, yeah,
But I thought that was an upside thing. I don't know. Yeah.
yeah, 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 yeah.
Yeah, we'll leave it at that. All right, you ready to get to work, P?
Yeah. Yeah, let's do it.